Welcome back, everyone. It's been such a great day here. We hope you are enjoying all these fantastic presentations. Next up, we have UR Energy. It trades on the New York Stock Exchange American under the symbol URG and the TSX under the symbol URE, and is a uranium mining company operating the Lost Creek in-situ recovery uranium facility in south central Wyoming, and has produced, packaged, and shipped more than 2.6 million pounds since commencement. Joining us is the chairman and CEO, Jeff Klenda. Welcome, Jeff.
Hi, Anna. Thank you. Thank you for having me.
All right. We're looking forward to your presentation. Whenever you're ready, the floor is yours.
Great. Thanks so much. I'd like to, again, thank you for giving me the opportunity to talk about our company and to share our story and take this moment to thank all the folks for taking time out of their busy schedules to spend a little time with us and hear about your energy. As Anna mentioned, the company is an in-situ recovery facility in the south central part of the state of Wyoming. We've actually been in business now. We just, at the end of last month, marked 17 years of production there in the Great Divide Basin. And on your screen right now, what you're seeing is in the upper left-hand corner, you're seeing the interior of our Lost Creek processing plant. This is, without a doubt, the state-of-the-art ISR facility anywhere in the world. And it was built in 2013 and has been in production ever since. And for those of you that may not be familiar with this, in-situ recovery now is responsible for more than 55% of all uranium production globally. And that number is growing every year. And in fact, what you're looking at there, as you look at the interior of the plant, what in situ means is that we are solution miners. And so what we do is that we use a very highly oxygenated bicarbonate of soda. We do not use sulfuric acid like is used in other parts of the world, most notably in Kazakhstan, but rather we use this heavily oxygenated bicarbonate of soda that we pump into the ground. And if you can envision the 5 spot on a dice, the 4 corner wells would be the injection wells, and the center dot would be the extraction or the production well. And so what we do is we pump in the highly oxygenated lixiviant, and what we extract is the impregnated solution that's very heavily, that's where the uranium has been separated underground in place or in situ. And it comes into those very large series of tanks that you see in the upper right-hand side of that picture. Those are ion exchange columns, where the impregnated solution is loaded onto millions of tiny polymer beads, where the uranium then bonds to those beads, is shipped across the plant or pipelined across the plant to the elution circuit, where the uranium is stripped off the beads go back. That's called a loaded resin, by the way, when it has the uranium on it. The resin goes back for reuse again into the ion exchange columns, and what comes out of it then is the enriched eluent, and that is a very, very densely yellow liquid that goes to the precipitation circuit, where it is dewatered, and ultimately it is filter pressed, dried, and packaged as yellow cake, and it goes out our facility. On the right-hand side, you can see those drums. It goes out in approximately 875-pound drums. And when we are selling into contracts at approximately, say, $50 a pound, each one of those drums goes out the door at about $44,000 per barrel, and that's our business model. So this is what we that's as technical as it gets, but when you have the contracts, with the Lost Creek has proven to be just a tremendous producer. You see the disclaimer slide here. I will make some forward-looking statements during my presentation this morning, but what I'll do is I'll attempt to designate them as forward-looking statements as I make them. But on this next slide, what you're seeing here is our company story at a glance. Lost Creek, as Anna mentioned, has been in production now for the last nearly 8 years. We began production in August of 2013. So we have more than 7 years of consistent production there. We've produced just under 3 million pounds during that time in 2020. But what we have done is that we have pulled back production now due to persistently low prices in uranium. We hope that this is the year that's changing. But due to those consistently low prices, we've scaled back production. But one of the good things that has emerged from Lost Creek over the course of the last 7.5 years is that we have emerged as the lowest cost producer in the world outside of Kazakhstan. And that's saying something. The Kazakhs, they produce in very low cost tenge, their national currency, and they sell in very high priced dollars. I think that anybody that has that type of an advantage can look like a economic marvel, but they are the lowest cost producers in the world. And we here in the United States, we are not only the lowest cost producer in the United States, we're the lowest cost producer in North America, and we believe also in the world outside of Kazakhstan. But again, we've scaled down our operations, but it's important to note that we've maintained our operational staff. This is critical. We want to be sure that we're ready to resume production at a high level and do it in a very short period of time. And recently, we received some additional permitting that we've been working on for years. Lost Creek's been producing for 8 years, but we wanted to increase the permitted footprint. And I'll show you that on another slide, but we just received this 2 weeks ago. It enabled us to increase our production at Lost Creek. By the way, this facility is licensed to produce 2 million pounds per year. But the way we are currently licensed, we can produce up to 1 million pounds per year at Lost Creek. And with the license, the permit that we just received, the license enhancement amendment, we can now produce 1.2 million pounds per year there. And if the contracts call for it, we will certainly do so, and we'll ramp up to that level. But we can take toll milling from other facilities that will take us up to 2 million pounds per year. And one of the things that we've done over the course of the last 8 years that very few other companies enjoyed is that we had the foresight as both a board and an executive staff that after Fukushima occurred, and everybody remembers that on the coast of Japan, that was in March of 2011. We actually were very aggressive about putting long-term contracts in place, and so we did just that. Those long-term contracts have enabled us to cash flow, and in fact, 3 of the last 4 years, we've cash flow positively because of our delivery into our long-term contracts. And that's something that very few, there are only a couple of other players in the industry, usually larger companies, have been able to enjoy, because most of the companies in our industry never put long-term contracts in place. So it's given us cash flow stability. And the other advantage is that it's enabled us to avoid extensive dilution to our shareholders. So we've been able to really maintain the capital structure during a very challenging time. Right now, this is an exciting time in the industry. And I wouldn't have thought this after the presidential election, but the fact is that the Biden administration has proven to be very good for the uranium industry. They're not only doing, but they're saying all the right things. They've designated a uranium or a nuclear czar or energy czar. That is John Kerry. I don't like the term, but and he's actually been saying all the right things himself. He emphasizes the need to keep all of the nuclear reactors that we have up and running in the United States in place and not let any of them go down. So I think that this is something that's important. And in addition to that, we were successful in seeing a piece of legislation or an addition to the Appropriations bill, the omnibus bill at the end of the year, an appropriation for $75 million for the establishment of a United States uranium reserve here in this country. This is critical. We've gotten to a point where we have almost no reserve of uranium that can be used by our nuclear power producers in the United States. And so this is a real deficiency and a real problem for the U.S. that now has been addressed with this appropriation. And because of the working fuel, the Nuclear Fuel Working Group, it also called for, in its final report that was released last year, the $150 million being devoted to this uranium reserve over the next 10 years. This is something that bodes very well for the uranium producers in the United States. I'm going to spend just a couple of minutes talking about supply demand. I think with any commodity, this is essential to understand the fundamentals of that supply demand. And right now, we are very much a growth story. We're very much a growing demand story here in the United States. In the United States, nuclear power accounts for about 20% of our electricity grid and our electricity consumption in this country. And we also account for approximately 55% of our carbon-free emissions. So we are a very big part of the clean energy mandate from the Biden administration and the Paris Accords. And if you're serious about resolving climate change, nuclear is going to have to play a very big role in that. Look, we all saw what happened in Texas. The solar collectors for solar did not work. They were frozen over. The windmills stopped turning. Many of them were destroyed by the deep freeze. And if it were not for nuclear, hundreds of people more would have died and frozen to death in Texas had it not been for nuclear power in that state. So nuclear is very, very important, not just in this country, but around the world, where we account for 11% of total electricity production. And that number is growing. At the present time, there's 443 large nuclear reactors that are under construction. Last year, because of COVID, we only saw one of those reactors come online, and this year will be much different. We are anticipating that we will see somewhere between 12 and 15 reactors coming online in 2021, which should significantly increase demand as the initial core loads for those new reactors are put in place. So we should see increased demand this year, but overall, we're anticipating an average of in excess of 3% of demand. And in fact, the World Nuclear Association estimates under all of its scenarios, its baseline scenario, lowercase and uppercase, that we're going to continue to see growth in demand for uranium throughout the next decade. One of the things that I think cannot be overstated is that we are now in our third consecutive year of structural deficit in terms of supply globally. In fact, in 2019, the world consumed approximately 187 pounds of uranium, and we only produced 139 million pounds, so a 58 million pound structural deficit. In 2020, that number was right at 57 million pounds once again. And this year, in calendar year 2021, we're anticipating that we're going to see yet another structural deficit of in excess of 55 million pounds. So this is something that continues. It's consuming the above ground inventories, or what's known as secondary supply. But one of the other things that's happened that's been a more recent dynamic is we've seen a lot of new producers come into our industry, and these have been explorers, developers. It's been some of the physical funds like Yellowcake and UPC, but also the utilities. We saw 5 requests for proposal from the large utilities in the first quarter of 2021. So we're seeing a lot of new buyers enter the market once again, in a market that has been oversupplied and with demand having been diminished because of the reactors that were shut down in Japan. It's nice to see the new buyers coming in, and the structural deficit simply cannot last for very long. But moving on now to the supply side of the equation, COVID-19 was a very impactful year. Not only do you have the 2 largest producers in the world, that's Kazatomprom and Cameco in Canada. Those 2 entities both had to shut down production last year because of COVID-19, and they were both buyers in the market. So they too were consuming the above ground available inventories. But it was interesting because by the time we got into April and May, we found ourselves in a position where more than 46 million pounds of primary production had fallen offline, which was the equivalent of approximately 35% of global primary production had fallen offline by mid-year last year. So, and Kazatomprom has had a policy where they're going to continue to produce at 20% below their optimal capacity that they have available because of their subsurface contracts that they have in their home country. But it's important to state that right now, the United States has always been the leader in nuclear technology and has always been the leader in the nuclear industry, whether that be for weapons development or more recently strictly for commercial use. But one of the things that's interesting is that now for the first time between ourselves and our Canadian partners to the north, there is no production that is coming out of North America at the present time. And this is the first time that that has been the case since the late 1940s. So we are truly in interesting times here. So what does this mean to the United States? This is really what our focus is. It's our primary concern. But if you take a look at the very colorful slide that's up on your screen right now, that bar graph is depicting production in the United States over the last 20 plus years. And as you can see, at our best point back in the late 1990s, we were only producing about 6 million pounds. We are now in a position where we are 100% dependent on foreign countries for our nuclear fuel. I would suggest to not only our leaders, but the leaders of any country that that is insane energy policy, and it is downright dangerous national security policy. But we find ourselves in a position where we are indeed 100% dependent on foreign sources for nuclear fuel. But in addition to that, we are the largest consumer of uranium on the planet, consuming in excess of 50 million pounds each year. And yet we are now in a position where the Department of Energy no longer even records the amount of production taking place in the United States because it is minuscule. In fact, we are estimating that this year we'll only produce a little over maybe 25 million, perhaps, or 25,000, perhaps 30,000 pounds. And keep in mind, in the United States, domestically, our industry consumes upwards of 50 million pounds per year. So we're not even producing 1% of what we consume in this country. It's a well-known fact that we're reliant on China for 80% of our rare earths, and we simply cannot afford to have something as important as nuclear fuel and nuclear energy be that reliant on foreign sources. And in many cases, we have gotten to the point where we are more than 50% reliant for our nuclear fuel on Russia, Kazakhstan, and Uzbekistan. So in other words, Vladimir Putin and his confederates, we are now reliant upon them for our nuclear fuel. And given what's going on in various areas around the world, that's a very tenuous position to place our country in, to say the least. But there's a lot of things going on, as I mentioned. And so what we see what's happening today is kind of a convergence of market forces. Not only did we have the Nuclear Fuel Working Group, which President Trump put in place, which included 6 of the agencies of the federal government, 2 scientific committees, but in addition to that, the NRC and the Federal Energy Commission as well. And so they finally released their report on April 23rd of last year. But in that report, they made it very clear that our dependence on Russia, Kazakhstan, and Uzbekistan was resulting in price suppression in our country. They leave it to Vladimir Putin. He's going to grab market share wherever he can. And being reliant on Vladimir Putin, I think that we all know how that has worked out for the Europeans and for the Eastern Europeans, and both Eastern and Western Europeans, when it comes to gas, natural gas, and oil. He has shut that off whenever he's wanted to, and very much has used that as a political weapon. But what came about also was the recommendation for the establishment of a uranium reserve here in the United States. This is very important. We need to have the ability to provide for the reloads for our nuclear power plants. We have a fleet of 94 nuclear reactors in the United States, and yet our reserve has been depleted to the point where we only have 6 million pounds. Ladies and gentlemen, that's the equivalent of 2 reloads for 2 reactors. So what do? You've got 94 reactors and you only have 6 million pounds in a reserve to protect those reactors. Other than that, we're reliant on Vladimir Putin and others like him around the globe, in many cases, geostrategic rivals. So right now, the budget appropriations process is already underway for 2022. And what we're busy, we're active politically, and we want to make sure that the $150 million is allocated for additional purchases under the uranium reserve for the next 10 years. In addition to that, in October of last year, we extended and amended the Russian suspension agreement. Now, this was put in place back in 1993. And what it was originally, it was a good idea because there was proliferation taking place around the globe. Nuclear weapons were disappearing after the dismantling of the Soviet Union. Nuclear weapons were disappearing, scientists were disappearing, and rich plutonium were disappearing. So what we did is we put the suspension agreement in place so that we could take that material, blend it down for civilian purposes, and so that we could take that material out of the marketplace. A good idea at a good time. Over the years, however, what that's morphed into is basically giving the Russians 20% of our consumption here in the United States. So of the 50 million pounds that we consume, the Russians are providing the material for approximately 10 million of those pounds. And between the Kazakhs and the Uzbeks, it comes to more than 25 million pounds. So we become very dependent on them, and they're no longer blending down. So it doesn't serve the same purpose that it did before. This was extended and amended in October of this year. And we're very pleased that over the course of the next 20 years, that 20% dependency on the Russians will be reduced to 17%. We wanted it to go down to 15%. Politically, we couldn't make it happen, but we'll take the 17%. And there was a return feed provision there, which helps out the domestic miner. So again, this was very good. One other thing that came about last year politically was that President Trump designated uranium as one of the United States critical minerals. This is something that many of you are probably familiar with, but we have more than 30 critical minerals in the United States. Those minerals that we consider to be absolutely critical to our well-being and continued functioning as a society, as a government, and for the well-being of the population of this country. More than half of those, we have become 100% dependent on foreign countries for those minerals. So fortunately, we've cut a deal with our neighbors to the north in Canada, and we are going to be producing many more of these critical minerals in conjunction with the Canadians. And this is something that's going to be very beneficial to the United States and its self-sufficiency. But let me turn for a moment and talk about Lost Creek. Lost Creek is our flagship project. It's been in production since 2013, as I mentioned. And for lack of a better way to put it, it has proven to just be a beast. The picture that you're looking at in the upper left-hand corner of your screen, in the green is the greater Lost Creek area. It's approximately 36,000 acres. Inset in blue is the permit area. This is the part of the Lost Creek greater area that has been permitted. You can see that our processing plant sits right smack dab in the middle of that permitted area. So everything that we produce there just gets pipelined right into the processing plant. And over the course of the last 7 years, we had originally modeled that we would be able to achieve approximately an 80% recovery rate. I'm very pleased to report that, in fact, what we have achieved is a 93% recovery rate consistent on average over those last 7 years. And as you see from the bar graph below, this is a very scalable project. When we first went into production, we had approximately 6.25 million pounds under the measured and indicated and inferred categories. Just in 5 years, we increased that to more than 20 million pounds. This is a forward-looking statement, but we believe that with the additional funds being allocated to exploration, we believe that we can expand that to nearly double that size to over 40 million pounds. But as I mentioned, it has been just an excellent producer. And right now, we believe the best producer in the United States. What you see on your screen before you right now, I apologize, it's a bit of a busy slide, but the operational results have been excellent. What we did is that we removed calendar year 13 across the top. You see the calendar years. And then on the right-hand side, we removed calendar year 2020 because the bulk of the production was done between 2014 and 2019. And then on the left, you can see the different categories of the captured and drum pounds, the number of pounds that were sold in each one of those years. And then in the next line down, the next row, the number of pounds that we purchased and the number of pounds that we produced that were delivered into the market, what our average sales price was, and what our average costs were. And I would direct your attention to calendar year 2015. In that year, we produced approximately 727,000 pounds. And you can see that we purchased approximately 200,000 of those pounds. We delivered them into the market, at an average price of a little over $45 a pound and had great revenues. But we got our C1 cash cost down to $16.27. Our all-in, our AISC was only a little above $25 a pound. So what we, I think, demonstrated very well is that the more we produce, the lower our cost is. So what we're anxious to demonstrate to the world is that give us a chance to produce 1 million or 1.2 million pounds there at Lost Creek. And again, this is a forward-looking statement, but we believe that we can get our C1 cash cost down to $12 a pound and our all-in cost to well under $20 a pound. But since we were buying those pounds, I mean, look, I had contracts on off-takes for upwards of $50 a pound, and I'm buying pounds. And when I can buy pounds in the market for $21 a pound, deliver those into my contracts and scrape a $29 delta and keep my pounds in the ground, obviously that's the thing that we needed to do. And so we had been doing that for 4 of the last 5 years, and it allowed us to not only preserve our pounds, but build inventories along the way. Our next project that's coming online is our Pathfinder Project. It's got about a 9-year mine life. Obviously, Lost Creek will be much longer, but when you take a look at that second bullet point, our preliminary economic analysis indicates to us that our very first production there should come out, our C1 cash costs at about $14.54, almost $2 below what our lowest cost has been at Lost Creek. And a lot of that is attributable to the fact that we have about 4 times the grade at Lost Creek, or at Shirley Basin, that we have at Lost Creek. So we are expecting this to be a very solid producer for us, and one that we think that we can ramp up quickly. By the way, when we acquired this from the French giant Areva, now called Orano, we felt that this had an NRC license with it, but it was for conventional recovery. We are in-situ miners. We want to do the solution mining, and we are now the permitting here. The final permitting is imminent. We have stated so in a press release, so I'm not giving you any material non-disclosed information. Our applications are on file, and we expect to have the final permits here very soon in the weeks ahead. And when they come out, those permits will then have succeeded in doubling, effectively, our production capacity as a company. So this is a very exciting time for us when we are adding to our ability to produce as a company. But here you see we have a pipeline of 3 projects. Now, we actually have a dozen different projects, but we only put 3 in the PowerPoint. And the reason being is that these 3 projects here are all projects that can be brought into production over the course of the next 3 to 5 years. We do not tout pounds that are just moose pasture that perhaps there's been some work on, maybe there hasn't been. But that's a lot of blue sky. We try not to engage in that. Once we became a producer, we decided that we would leave the blue sky to the promoters to promote. We are a production company, and we tend to talk about those things that we know are real. And these projects are all real. They have very solid pounds and high level of pounds, and they represent many years of production to come in the future. This is how we view our ramp-up strategy. We think that if given contracts this year, and that can come from either the federal government or from the domestic utilities, the domestic power producers, but we see our ability to ramp up Lost Creek as something that would take place in the first year, followed in the second year by ramp up at Shirley Basin, and then in the outlying years, Lost Soldier would come online as well. And keep in mind, once again, we've kept our operating staff on hand. We've kept them on staff. That's cost us a lot of money, but this is what enables us to ramp up quickly as a company. And we think that this is our greatest advantage as a company. In fact, of all the slides that I'm going through today, this is probably the one that I think is probably the most significant. If you take a look at it here, the Lost Creek, we believe that we can ramp to, if given that go signal, and we've got the contracts for it, we believe that we can ramp to approximately 1 million pounds per year run rate, and we can do that in as little as a 6-month period of time and at a cost of a little over $15 million. In mining terms, that's nothing. Shirley Basin, would follow that on, we'd be doing that almost simultaneously, but we believe that we can ramp that to another 500,000 to 750,000 pounds per year and do that in as little as 15 months, but no later than a year and a half. So in other words, we believe that, and we've modeled this and we've been producing, so we feel we have a lot of confidence in our numbers. We believe that we can ramp to 2 million pounds per year run rate. We can do that in a year and a half period of time, and we can do that at a cost totaling approximately $40 million. And there is no one else in our industry that can do it in that timeline and for that little money. This is one of the things that I think is the most significant about our story. The fact that we had contracts in place for all of those years was something that was just it's hard to overstate the advantage that gave us in the marketplace. Instead of having to live equity raise to equity raise, we were actually in a position where we were able to execute on our business model, deliver into all of our contracts. We've never failed to make a delivery and do it without diluting our shareholders excessively. This is very important. And these are our primary peers in the industry. Two of them, as you can see, are off the charts. The other is more than 2.5 times our level of dilution. And we like to think this is something that's going to continue. And by the way, I am the largest shareholder in this company. I've never had a share given to me. I paid cold hard cash for all the shares that I have in URE Energy. My wife wants to strangle me, but I've got about $3.5 million of my own money in this company. So I'm a big believer in eating my own cooking. You can see our current share capital and cash position. You see the number of shares we have issued and outstanding and on a fully diluted basis. At the present time, we have just under $18 million in cash, which gives us a very solid cash position. And also, as I mentioned, we have been able to build our inventory. We have just under 300,000 pounds in inventory, and at recent prices of $30, $31 a pound, it's approximately $9 million in inventory. And we can turn our inventory into cash in approximately 5 days. So we have $18 million in cash. We have domestically produced inventory. And by the way, when it comes time to deliver into the uranium reserve here in the United States, one of the things that's important or significant that should be remembered is that those pounds have to be produced in the United States. That's the whole objective of the uranium reserve, is that we incentivize domestic producers to rebuild our nuclear fuel capability here in the United States, production capability, and that we deliver into that uranium reserve. So we have an inventory that is ready to be delivered into the uranium reserve at any time. And as you can see in the lower left-hand corner, we have great liquidity in the stock, averaging just under 6 million shares a day of trading. And so we are a very liquid story at this point in time. Your logical question at this point would be, what are the catalysts in the industry? I think that the supply-demand fundamentals are shaping up to be very, very favorable. Not only do we have that structural deficit, which is now in its third year, but keep this in perspective. When you have a commodity that consumes approximately 180 million pounds per year, but you're running a structural deficit of nearly 1/3 of that each year, the question becomes, how long can you sustain that before prices just have to move higher? They simply must move higher. I'm going to make a forward-looking statement, and I'm going to say that I believe that is going to happen in the second half of this year, where we will see the domestic utilities finally have to come into the market because prices will be rising and they can't sit on their hands any longer. They've got to come in and they've got to begin contracting once again. Again, we see rising demand in all of the World Nuclear Association's scenarios. And what's really exciting in our industry is the new technologies. The small modular reactors will become a fact of life over the next 2-3 years, and they will be everywhere, all around the globe. They have accident-tolerant fuel. They cannot melt down. This is going to be the technology that the world is going to be relying on to solve climate change. It cannot rely on just wind and solar. Again, we saw that in Texas. It's going to have to be wind, solar, and nuclear is going to play a vital role in that. But current market conditions, look, COVID is still a fact of life out there. It has still led to a number of closures. A number of those Production facilities either became uneconomic or they just had to shut down because of COVID. That is still the case. We still have the largest producers in the world in the market as actual buyers. We've now got the uranium reserves stood up. We've got the Russian suspension agreement carved down to where they're able to dump less material into our market. And what we really like is the fact that the Biden administration has made nuclear a central component in their clean energy mandate. So the other thing I'd be remiss if I didn't talk about are the geopolitical risks. The fact is, whether we like it or not, uranium is probably the most politicized commodity anywhere in the world. And the fact is that on Inauguration Day, we began moving troops and heavy armaments into Syria. We are all aware of the buildup of troops and armaments that are taking place on the Ukrainian border right now. If we find ourselves in a shooting war with the Russians, whether it's in Syria, the South China Sea, Ukraine, Iran, whatever the case might be, you name the hotspot. If we get into that type of a confrontation, and it looks like one is imminent in Ukraine right now, the question becomes, how long does Vladimir Putin continue to supply 20% directly of our nuclear fuel, and between him and his confederates in Kazakhstan and Uzbekistan, more than 50%, before he just says, okay, we're going to cut off the nuclear fuel to the United States. And he has stated that at the present that he will not use nuclear fuel as a political weapon at this time, his words. So this is something that is potentially a very explosive situation, excuse the pun, but one where if there was a disruption in the flow of that material coming into the United States, since we have become so heavily dependent on it, it would throw our domestic utilities into crisis literally overnight. My final slide here, I think the takeaways are very strong. We're at the lowest burn rate that we've been in many, many years. We have solid runway based on the cash and inventory that we have that will last us all the way into 2024. We have restructured the small debt that we have so that we don't even have a principal payment until the fourth quarter of 2022. And as I stated before down below on that slide, we are in a unique position where we can ramp up faster at lower cost and with less dilution to our shareholders than any one of our peers. When you start really looking at what the cost is to ramp up, few people want to talk about it. We've modeled it. We can identify what those numbers are, and there's nobody that can do it faster and at lower cost than we can. So with that, here's our contact information, and I'll be happy to field any questions that you may have with the time we have remaining.
All right. Thank you so much. That was a great presentation. And Jeff, some of these questions might seem a little redundant, but I want to ask them anyway, because you never know when our viewers pop on. So talk to us a little bit more about, considering most of uranium demand will be coming from China and India, both have volatile relationships with the West. What are the steps you and the industry are taking to mitigate political risk?
Well, right now, first of all, I think that you need to remember that the uranium production in the United States is virtually non-existent. We have had the opportunity to sell material into China and into other countries. We have a policy internally where I'll never sell a pound that I believe for a moment could be weaponized. And so as far as the political risk, quite candidly, and I'm sorry to have to say this, but most of the political risk is internal. It's here in the United States. I think that has changed. We are now seeing bipartisan support, and we work very hard with both sides of the aisle, both the Republicans and the Democrats in the House and in the Senate, to make sure that we're going to be part of that appropriations budget that's put on the president's desk later in the fall, and to make sure that there are no more closures of nuclear facilities here in the United States. So whether I like it or not, this is a very political industry, and we're very politically active. So we do everything we can to mitigate that political risk.
Perfect. Are there any other majors producing around your Lost Creek facility?
Formerly, Cameco was producing in the southeast part of the state. They have been shut down for about 4 years now. At the present time, there is no other production taking place in Wyoming. We're the only producer in Wyoming. And in fact, I didn't mention this in my presentation, but there are only two producers left in the United States, ourselves and one others. And both of us have inventories and have kept our production staffs on, our operational staffs on, so we stand ready to deliver into the uranium reserve once it's stood up. But at the present time, yes, there is potential for other production around us in Wyoming. At the present time, however, there is none.
So with the path to clean energy marked by nuclear energy, do you think there will be a marked increase in uranium spot price, or do you believe the current uranium stockpile is sufficient enough to meet all the demands?
You know, it's not. And since we are in that structural deficit that I mentioned, that's in excess of 50 million pounds per year, constituting nearly a third of global consumption, the secondary supply simply cannot last for much longer. That it's just a hard, cold fact. And so we believe that the utilities will find themselves in a position where they have to come into the market and they have to begin rebuilding their stockpiles. Unfortunately, the utilities typically keep about 3 years of inventory. They are now down to about 2.1, 2.2 years of inventory, and that's a dangerously low level of inventory for them. I'm surprised that, frankly, that their public utility commissions are allowing it, but we feel that in the second half of this year, we will see the utilities come back into the market, and that should coincide with the uranium reserve being stood up and our ability to enter into contracts with the federal government as well.
So your last quarterly report shows a 2-cent loss. How much can you grow, and how will your margins improve over the next 12 months?
Well, without contracts, there will be no growth over the next 12 months. But this is something that should have taken place, frankly, over the last 3 years. We should have seen a new contracting era begin. But the reason we delivered into the last of our contracts last year, so that's why we had a loss. But as I mentioned, 3 out of the last 5 years, and we would have been 4 out of the last year, except for an accounting change that was imposed on us. But we have been cash flow positive with $50 contracts. So we're quite confident that with the reserve being stood up, and we believe that we'll be able to secure contracts with the federal government, and with the utilities, we believe coming into the market in the latter half of this year, we'll be able to secure contracts. And so we think that, and with our ability to ramp up as quickly as we can, we now feel that we're in a position where we can begin earning again and cash flowing as a producer. And again, we feel that we can do it faster than anyone else. So we're in a unique position with our operational staff at the ready to be able to do that. And we believe that that'll begin in the second half of this year.
Right. So what does it take to get on the Russell 3000? Is it something URG applies for, or is this something that the Russell 3000 index does automatically when a company maintains a certain price point?
You know what? Thank you for asking that. The fact is that we've been on the Russell 3 times and off the Russell 3 times. And when you go on, it's a whole lot of fun. And when you come off, it's not so much. But basically, they have a re-rank date. In this case, that's coming up on May 7th. And there are 2 criteria. One is that you trade at above $1 a share. We're currently at $1.15 or thereabout. And then you have to exceed their market threshold, their market cap threshold. Now, that is something that's never known. That's only known after the re-rank date. So what they do is they select the top 1,000 companies by market cap. That becomes the Russell 1000. Then they take the next 2,000 largest companies by market cap. That becomes the Russell 2000. And so last year, for example, that threshold was 156 million. At the present time, we have a market cap of approximately 215, 220 million. And so we believe this year we're going to be able to make it back on the Russell. And that would require that we have approximately 135, 140 new index funds come in as shareholders. And as I said, we've been on the Russell 3 times. That's a whole lot of fun when they come in. And of course, then on the reconstitution date, you have a big trading. So I think that one of the plays on our stock is that I believe we're going to retake the Russell again this year and get the surge in volume and price that comes along with it. So we're very hopeful.
How are you different from your competitors out there?
Well, I think in 2 ways. One is that I can state this unequivocally. We're a lower cost producer. We're the lowest cost producer in North America. We believe we're the lowest cost producer outside of Kazakhstan. That's a clear advantage. Cost is always going to be a clear advantage. But the second thing is that we've got our operational staff on, and we've kept them on at heavy cost and to the company over the last several years. And keep in mind that in-situ recovery is something that it takes the individuals that staff our plant are highly experienced, and they've got a great deal of expertise. It's not like, I'm going to date myself here, it's not like you can go find these guys in the yellow pages or just run an ad on Craigslist. When other companies are saying they're going to ramp up production, one of the things they never talk about is where they're going to get the personnel to do that. And the fact is those guys, when they leave our industry, they go to oil and gas, they go to other forms of mining, they go to other forms of water operations, but they don't just sit around waiting for a phone call. So keeping our operational staff on has been critical, and it will be the foundation on which we will build out the rest of our staff once we have the opportunity to ramp up. So our distinct advantage over our peers are twofold. One, we are the lowest cost producer. Two, we've got our operational staff on at the plant, at the ready, and ready to ramp up at any time.
How much of an impact do you think the Biden administration will have on your production?
Well, I think, this has been a surprise for me. I've got to be honest with you. We've always looked at the Democrats as being opponents of nuclear power, and in the past they have been. But I honestly think that, and I mean this with the best of intentions, I think that saner heads have prevailed. The reality is that no other form of energy can match the safety record of nuclear power. That's just a fact. And the Biden administration has, I believe, recognized this. I think they understand that you can build out wind and solar, but wind and solar only operate at best at a 35% capacity. You have got to have 24/7, 365 base load energy production taking place to back up wind and solar at all times. This administration has been they have not been friendly. They have made it clear that they do not want that power coming from carbon sources, oil and natural gas. So nuclear is a central component in their clean energy strategy. We're very happy about that. I think the evidence of that is the U.S. reserve, the uranium reserve that's being put in place. There is other legislation out there that would give credits to our domestic utilities for buying domestically. And I think that what you're going to see under the Biden administration, and it's a very sound move, is you're going to see a commitment to rebuild not only the fuel cycle production capacity in the United States, but preservation of the existing nuclear power plants that we have. But also we are accelerating the new technologies that are coming out, and that's the small modular and micro reactors that are they're going to be the future. And this administration seems to be, they seem to understand that, and we're very happy to see that, and that's why we've seen the prices of our stock rise the way they have.
Fantastic. We do have a bunch more questions that we will send directly to you so you can answer all the people that are interested in your presentation. Fantastic presentation, Jeffrey. Thank you so much for your time and knowledge in this sector. We look forward to your updates.
Anna, thank you so much. Thanks for having me. Have a great day.
All right, everyone. Well, remember, you're going to experience a quick black screen, and we're going to move to our next presenter. So stay with us. We'll be right back. If you're on your Apple device, click the play button to launch the next live presentation. We'll be right back.